Hi, everybody. Welcome back to the E3 podcast. I'm Melissa Johnson. Today I have Lisa Hylton on. Welcome, Lisa.
Thank you for having me.
Thank you. So let's just jump right in. And how about if you tell the audience a little bit about you?
Yeah, totally. So my name is Lisa Hylton, and I am a real estate syndicator that helps entrepreneurs and business owners invest in tax-efficient real estate investing. My background is I've been an accountant for the past 14 years or so, 4 of which I've been a controller on private equity real estate funds and 10 years in audit. And I live in the Los Angeles area. So that's a little bit about me at a high level.
Nice. And we also mentioned that you're a podcast host also. So
Yes.
the Level
I
Up
am
REI podcast.
That's right. I'm the host of the Level Up REI podcast.
Nice.
And I drop episodes every Tuesday, and they're a combination of real estate, mindset, entrepreneurship. So yeah.
Awesome. Well, I'm so glad to talk to you today. Thank you for joining us. So let's just start with, for anybody that's listening that doesn't understand what syndication is, can you kind of break that down and explain what that is and what that does for investors?
Yeah, sure. So at a high level, syndications are group investments that allow investors to pool their money together to buy assets that they would be unable to do so on their own. So the benefits of syndications are that you are able to get into those larger asset classes. It's usually on commercial real estate properties, everything from multifamily to industrial, self-storage, mobile home parks, the whole 9 yards. And you're leveraging the expertise, experience, and time of general partners to invest in real estate, while you are able to then use your time to continue to generate money in either your job or your business. So those are like the high level in terms of what syndication is.
Thank you. So if somebody was thinking about participating in something like that, how would they vet the people who are managing the money?
Yes, that's a super, 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 super really important question. I think the first thing that you need to do is develop a relationship with people and get to know them. This is probably contrary to maybe what you might see out there, because there's like crowdfunding websites called CrowdStreet and Fundrise that you can just go on to and invest in real estate to like right now. Like right now. So that comes counter to what I'm saying, which is develop a relationship. Why I think that's important is because of why you are asking this question. As you are spending the time to build your business or work your job, you're spending time to earn that money. You want to make sure that the people that you decide to invest in are actually people who are authentic, full of integrity, and are going to do the things that they say that they're going to do. And when things don't go well, they're going to communicate to you so that way you know where they stand and what's going on. So number one, I would say develop a relationship. And some of the ways you can do that is by listening to podcasts like E3, and getting to know from these podcasts. You then are learning about people who are syndicators. You then can go to their website, listen to them on other podcasts, and then reading their blogs to sort of get a feel for their investment philosophy. So what they believe in investing in, what their strategy is, what their asset classes are, the types of returns that they're giving to investors, and then most importantly, their team and their track record. So learning a lot about how their deals have performed in the past and like what they're trying to accomplish. So I would say that's some of the most important things to do. And the only way you can do that is through listening to these podcasts and then actually taking action to going to their websites, getting on a call with them, talking to them, learning about them. By getting on a call, it doesn't mean that you're going to invest with them. It just means you are doing your due diligence to learn about who they are, to determine if they're people that you want to invest with.
Good idea. And probably too, like maybe checking around with other people too, like if they have got references or are willing to say like, hey, we did a deal with this person. If you'd like to talk to them and see kind of how the process went, if they were
Yeah.
satisfied, maybe that would be a good
I
way to
totally
vet too.
agree. As a passive investor myself, I think it would be beneficial to, have groups out there that you could meet other passive investors to sort of say on your own, to say, hey, this deal has come up, or have you worked with this sponsor before, and what has been your experience? Because if you ask the sponsor themselves or the syndicator themselves, there's a chance that they could send you to someone who has had a positive experience with them.
Mhm.
Whereas if you do your due diligence on your own, then you're able to then find people that, you know, have, or maybe even if you start with those people, like sort of saying, hey, can you recommend other people that have invested with this person before? Because you want to do your homework. That's a part of you just sort of being a good steward for your money.
Yeah. I was interviewing somebody the other day and we were kind of talking about that. And she had this great tip of, I forgot what she called it. I feel like it was like second ring or something like that. But basically, like somebody gives you a referral, right? Like maybe who is ever in charge of that syndication says, well, you could talk to this person, but so talk to that person, but then ask that person, do you know anyone else? So that you're getting
Mm.
it not from the main person in charge, but from actual person that's done something, and it's like it's a second of a second kind of a thing. Does that make sense?
Yes, it does. I've heard that before, that, it's in the third and fourth referral out that you really start to get um like the true stories
Right.
sometimes.
Right. That's kind of what she
So,
was saying too, because it's like, well, that person, because they picked and chose that one particular individual, but
yeah,
definitely talk to them. But again, like find out who they know and maybe who that person knows and kind of,
exactly.
yeah. So, in this sort of situation, how is your money or your investment protected?
Yes. So when you say protected, are you suggesting like if there's a guarantee per se, or
Yeah, I mean,
like
not
is
well,
there laws and regulations surrounding the syndication process?
yeah, mostly that because we understand that there's real property attached to the investment, so
Right.
there is something tangible there. But are there any other protections in place, like so that I don't know, people just aren't taking your money and like running off with it or something?
Yeah, what I would say is that, there are like there's SEC regulations in terms of like rules surrounding raising the money and surrounding um, you know, the issuance of a security. At the end of the day, like in terms of protecting you from someone running off and like not giving you like the PPM, so the private placement agreements and like the operating agreements, the private placement agreements and subscription agreements that investors sign when going into that deal seeks to help sort of protect them and sort of prevent that from happening. But you can't prevent people from running off. That's why it's so important to do your due diligence upfront, to make sure that you're working with people who have integrity.
Nice. So, what are some of the benefits of investing passively in real estate for entrepreneurs?
Yeah, so that's a great question. So, as an entrepreneur and a business owner, if you are someone, I think the best example I could give is think of someone who's you're a copywriter and you're running a successful copywriting business, which a lot of copywriting businesses have been booming currently because a lot of people have to move online. So copy is super important in terms of writing the right kind of copy for marketing and et cetera, et cetera. So you are building your business, you're doing well and you want to invest in real estate, but you already know that you don't want to be a landlord. Or you might live in a city like Los Angeles, like where I live, where this city has been that has been closed for like months, so to speak, in comparison to other cities, like, other states like Texas and Florida and Georgia. This city has been closed. So as a result, that has impacted people and renters and their ability to pay rent. So you're making money and you want to invest in real estate, but you have these combination of factors. So this is where real estate syndication can come in to be a viable choice, because it enables you to get exposure to a market that is different from yours, that doesn't require you to be an expert in that market, because you're leveraging the expertise of the syndication team to then get exposure to assets and returns, as well as a market that you wouldn't have been able to do so on your own.
So with those syndications, how can you explain how people get paid out of those? Like, is it do they get paid out every month, or is it, maybe maybe it depends on the exit strategy, if you're planning to fix up and then resell it again, possibly? Like, what does that look like?
Sure, that's a really great question. So the first thing is, what kind of syndication is it? So what is a business plan? So if the business plan is, and there's, at a high level, I'll touch on just 3 types of business plans. There's more, but they're the 3 most popular ones. Are the value add strategy, then you have deep value add, and then you have development. So you'll have syndications that are typically targeting these. There's others like core type properties, which are like typically high end, class A developments and that kind, or buildings, that kind of stuff. Most syndications, though, that are around that aren't at that level, usually the ones that are core are usually institutional. So like the big JP Morgan or BlackRock is buying like Ritz-Carlton. But outside of that, value add, typically you'll see monthly or quarterly distributions if you're investing into a value add syndication. Primarily because those properties usually are already cash flowing. So the syndicator is usually has a business plan where they're taking over an asset that's already generating cash flow, and they might be making some changes to it. So adding a bit of value to increase the rents. So that's the first type and most popular type. And usually the class on those is like class B, class A minus. But usually that B plus, B minus, that area, maybe even a C plus, asset. Now you have deep value add. So deep value add usually is requiring like a change in demographic. So you're taking over a multifamily, and the plan is to like change like who lives there to be like a class B type tenant versus a class C type tenant. And you're going to do some heavy work in terms of constructions and development and etc. So those types of projects sometimes will have a delay in when the distributions will start. So it might be like a 6 months before distributions kick in. Sometimes they might structure the deal. One thing I forgot to mention is, in the first scenario that I just spoke about with the value add, a lot of those will also have a preferred return, meaning that they'll set up the deal such that the investors get paid first, and then the general partner will get paid. And usually it's between 6 to 8%. So if you invest 100K, you could see between 6 to 8% of your money coming back to you each year. So you divide that by 12, and that's what you're going to see coming back each month, or divide it by 4, and that's what you see you coming back each quarter. Now, going to deep value add, a lot of those projects don't have preferred returns, primarily because it takes a while. They know that they're going to be in the hole, so to speak, for like 6 months, maybe even a year, when they're turning the ship. And that takes time, and it's higher risk. And usually those value add deals have a higher return because they're seeking to compensate investors for taking on the risk of the project that this project is going to have.
Right.
Then
Having their money out longer too, right?
potentially, yes. But higher returns, you'll most likely see higher returns in that deep value add than, say, a regular value add because of the nature of the work. And then lastly is opportunistic. And this one has the highest risk. And in terms of cash flow, these you'll generally not see any cash flow. And it's so interesting because when I was working for a large investment manager on private equity real estate funds, I'll never forget, we were on a call and these people are high net worth institutional investors. And we're calling from them. They are invested in an opportunistic fund. So it's all development projects. And we have been calling from them management fees, which is the way in which these institutionals, they structure their deals. And we called from them and then they wanted to have a call with us because they were like, why are you guys calling for management fees like every quarter? So I had to explain to them that, hey, you have actually invested in an opportunistic fund and not a fund that is kicking off cash flow each month. So because of that, we have to call from you every month in order to pay the house to continue to run this fund. And so the same thing applies here for opportunistic. When you do a syndication on a development deal, yes, the syndicator will raise all that money up front, and then they'll manage the money in terms of developing the project, whatever it is that they're developing. In this case, usually they're not calling capital afterwards unless there's an issue. But once again, this here opportunistic deals usually have the highest ability for return. You're looking at 20-25% or more in terms of return potential, or even more than that. So,
wow.
Yeah.
And those are, so you said development projects. So that's like a ground up type thing,
Correct.
right? That's not like a redevelopment of
That's
a
right.
commercial space or something, right?
Yeah. And people love it. Like, it's sexy, it's exciting. You're bringing something new to the marketplace, but it also comes with a lot of risk.
Yeah, I can imagine. That seems a little daunting to me, but
but to each his own.
Everybody does something different.
To each his own.
And I think there's a fear there too when you don't really understand too. Like I have learned so much the past month just about multifamily and syndication, and I'm like nowhere near an expert at all, but like these are all things that were not in my wheelhouse before, so it's been interesting learning about that. So thank you for breaking that down.
Yeah, you're
welcome.
Really hopefully that helps people in terms of like looking at syndication deals. Stuff like that.
So if you're looking at these deals, how do you determine if that deal is right for you?
Oh my goodness, such an amazing question. How do you determine if a deal is right for you? Starts with you getting clear about what you want. Yeah.
Yes.
So before you come to the party, you need to know what brings you to the party. So a couple things could bring someone to the party. Someone might be in a position in their business where they want, they have been in a successful business. They've been running it now for 10, 15, 20 years. They are now looking at, I want to retire. I want to get to a place where I no longer have to keep running all these different businesses. So real estate syndications can be a great way for them to transition into that retirement place that they envision for themselves through building long-term wealth. So they might be taking money out of their business to invest in a real estate syndication to build that retirement fund, that long-term wealth, as well as it could be a way for them to generate passive income. So they want another income stream, regardless of the situation of wherever their business is at. They just want to generate another income stream. 2020 has illustrated that having multiple income streams is super important, because you never know what could happen that could take out an income stream. So the third thing is people might be in a situation where they want to manage taxes. So they're interested in investing, and they have this money and they're looking at the stock market, and they could open a brokerage account, or they could go invest in crypto. But guess what? The moment they want to realize any of those gains from out of the stock market or from out of crypto, they get hit with a tax bill. So that's where that's where real estate syndications becomes very attractive, because once again, they're not giving up their time. This is finding a who, not an how, which is that book from Dan Sullivan, Strategic Coach. That who in your life that is going to help you to leverage your time, leverage your money in this case, to develop further wealth for yourself without you having to figure out how to do all of the things.
Got to read that book. It's on my shelf, and
Is
I've
it?
had like the third person to mention that book to me. I'm like, God, I bought that book, but I haven't read it yet. I need to.
Yes, it's good, girl. It's good. I love that book.
Well, and I love delegating. Like, I feel like that's a superpower for me. Like, I have no problems telling people what to do.
Yeah. Well,
I
then
do.
that book is perfect for you. And maybe you don't necessarily need it, but it's a good book. For me, that book, along with the 12-week year, is like a game changer. I think that anyone who reads the Who Not How should also read simultaneously that 12-week year. And then between the two of them, you're a rocket ship. You're gonna get some things done for sure.
Yeah.
But yeah, like getting really clear about what brings you to the party, so it could be building long-term wealth. It could be you want tax benefits. It could be you want to generate another stream of income. It could be that you are also just interested in appreciation. So people who are interested in appreciation, they're the ones who are going to invest in those development deals because they want appreciation. They're the ones who are going to invest in a syndication that's in California, because this is a city that will appreciate in value regardless. It's going to be low and limited on cash flow, potentially, most likely. But like when it comes to appreciation, you hold a property 10, 15 years. Come on, LA will still be here. People are still going to be moving to this city. So, yeah.
Love it. So, like, who do you feel like are good candidates of people to invest in a syndication?
Yeah. So who are good investors to invest? Like who, yeah. So I think that, an investor who is interested, a person who makes, a good person a person who wants to invest in real estate syndications is typically someone who is busy. So they have already determined in their life that they don't want to be doing all the hows when it comes to real estate. Either it's because they have a job that they're super focused on and that they're trying to build, or they have a business and they have several businesses or a business that they're working on and that they're building. Or they have realized that, they love real estate, they love the idea of it, but they don't actually want to be involved in any of the flipping and renovating and tenants and anything else. When you realize that that is where you're at, a lot of people feel that, oh, you know what, when they come to that realization, they think, oh, you know what, I need to go invest in the stock market. Or maybe real estate investment trusts are the only things that I can invest in because, I'm not good at managing contractors and wholesaling and finding properties and flipping and this and that and all this stuff. So they just sort of rule themselves out without getting a chance to sort of say, you know what, there is a place for you. real estate syndications could be a viable option for you.
Makes sense. So if somebody was looking to, like say you wanted to start a syndication, you were going to do a big project or something, what would you recommend people to do to find investors that would be interested in investing in it?
Yeah. So this now is a question for someone who wants to be active. And that person, not only do they want to be active, but before I get into your question, I just want to say at a high level, being active in a real estate syndication has there are three roles by and large, right? And several people can play some of these roles. There's more than just three, but there's three primary ones. The first is acquisitions. So you have someone who needs to be in charge of acquisitions. And they can, depending on how your business is set up, there could be a whole team of people under acquisitions. Then you have asset managers. So they're the people who are going to be managing the asset. And then lastly, you have investor relations. So those are the folks that are in charge of your question that you're talking about. So that's only one aspect or one area of the business. And then there's other people, like there's key partners, key principals, experienced partners, you have the lender and all that stuff. All of those other people, their roles in the syndication process as well. So from focusing on the investor relations, I think the first key thing is you need to build a system to attract, nurture, and help people to get to a place where they are now ready to invest into a deal. And that is a process. It doesn't happen overnight. And like most businesses, so as an entrepreneur, as a business owner, you are in business because this is a business that you want to do. Otherwise, you could create another business and go do something else. So the people who are focused on the investor relations side of the business, they're focused on it because that's the part of the business that they really enjoy doing.
Perfect. So, man, this is interesting. I feel like we could talk a lot about this. In this question, I probably should have started with this. If somebody was looking to start one of these, like to set something like this up, like say you've made a decision again, like there's a big project coming up and you realize like I need to raise capital for this and I want to do a syndication. What would be some things that people would do to like kick it off?
Yeah. So like I'm a little conservative. So so here's where I'll start with this. I'm a little conservative because the laws and the regulations are real. So this industry is governed by the SEC, Securities Exchange Commission. And they have a Reg D, 506B and 506C. So if you wait to think about investors last, then you're probably going to be in the situation where you need to do a 506C, which is that allows you to go out there and raise publicly for your deals. You can do it on Facebook and all these other places. And then but you're only limited to accredited investors, which is fine. And that's it. If you then want to raise 506B, which is, those are people that you need to have a relationship with. So you need to go through the process of attracting, nurturing, and helping people to get to that place where they like, know, and trust you and are now willing to invest with you. It's a process, and it should be a process to get to that place where someone is willing to then, hand over their money, because of the things that we spoke about earlier, which is, that track record, getting to know people, the integrity, the trust, the fact that you've worked really hard for your money, And you just want to make sure that this isn't someone who's just going to run off and like not do what they're supposed to do. Because if they do run off, how do you find them? Like, you know, and the time and the energy and more money spent to then find that person. So I think it's just really important to take your time to get to know people. So then if you are someone who's interested in this path, like you want to be a syndicator and you want to be on the side of, you know, buying projects and investing, having investors invest alongside you, then I think it would be beneficial for you to start thinking about, you know, nurturing investors. So getting out there, like, if you're doing a podcast, like you could create a podcast yourself, or create not a podcast, create a thought leadership platform. So that thought leadership platform could consist of podcast, YouTube, blogs, courses, anything else, everything about education, attracting, helping, building, all of that is underneath that roof. And a really good book for that is called The Best Ever Apartment Syndication Book by Joe Fairless. It really breaks down like the whole entire syndication process. And then for capital raising specifically, Raising Capital for Real Estate by Hunter Thompson. Great books, 2 great books. One is more specific on raising capital. So like if you realize that, oh, you know what, raising capital is my space, then I would just jump to the Hunter Thompson's book and get to that one. And then if you're just wanting to get an overview of the syndication business as a whole, because you have a project and you sort of want to go through the process of trying to get it syndicated, then the book by Joe Fairless is a good one to start with, because at least he talks about building the thought leadership platform and then building from there.
Thank you. Those are great resources. So we'll make sure to get those in the notes too, so people can check those out. I might have to check that out myself too.
Sure.
It's so interesting. Well, we're coming to the end of the time, Lisa. So thank you so much for joining us and sharing what you know. And if people want to reach out to you, how can they do that?
Yeah, so the best place they can go is to lisahylton.com/invest. When they go there, they can go and get onto my website, lisahylton.com. I also have a free 7-day passive investing made easy series, which is right on the first page as you get to my website. And then the /invest, if you want to talk to me and learn more about my deal offerings or just my business in general and or just more about real estate syndications in general, more than happy to have that call and talk to you. So yeah.
Great. Well, thank you again so much. I appreciate your time, and this has been great. Awesome. I feel like I've learned a ton. I was, I hope you didn't think I was taking a lot of notes.
I hope it's helpful for people. But yeah, totally an open book. Happy to help people. So yeah.
Great. Well, thank you so much.
You're welcome.